Accredited Investor Clips, conversations with leaders shaping private markets. Presented by VerifyInvestor.com, a T0 company.
Guys, welcome to Accredited Investor Clips by VerifyInvestor.com. I'm Jenny Shields, and I run the day-to-day operations at VerifyInvestor.com. Joining us today is Frank Weigand, Chair of the Trading and Markets Practice, member of the Digital Asset Group from Cahill, a frequent speaker on digital asset. We're also joined by my colleague, Mike Dietrich, SVP and Global Head of Sales in T0 Group and VerifyInvestor.com. Mike brings over 20 years in capital markets, fintech, with a focus on tokenization, trading, and settlement infrastructure. Mike, Frank, thank you so much for being here.
Thank you, Jenny.
As you know, we probably over the years have organically accumulated probably the largest database of verified accredited investors in the entire United States. And we recently did a survey. There's a significant appetite to learn about digital asset. So before we dig into what that means, can you each define what you mean by digital assets? Are we talking about tokenized securities, blockchain infrastructure, or something broader?
Sure, I'm happy to jump in. In terms of the definition of digital assets and what it means today, I think there are two broad categories through which people refer to digital assets. The first is when people refer to Bitcoin and similar cryptocurrencies that are viewed as investments or a store of value, or in some instances, speculative positions to take in the market. That would be viewed as one category. And the second category would be, from my perspective, the utilization of distributed ledger technology and applying it to capital markets functions. And that includes tokenization, right? So digital assets that take their form or assets that are impacted by DLT and this utilization of that technology in capital markets, as I indicated.
Mike, from a sales perspective at T0, what has changed in the investor conversations about digital assets in the last 18 to 24 months?
Yeah, lots of change, to be honest with you. The whole market as a whole has really evolved. I think some of the biggest shift, is that institutional investors are starting to ask why, and they really want to know how, right? I think that if you go back 18 months ago, I was really spending a lot of my conversation talking about why tokenization, why now, and that conversation is largely over. I think now the credibility question has been answered, and now it's replaced with a sort of much more sophisticated set of operational questions. How does it fit into my existing custody relationship? What does, kind of settlement finality look like? And how do I handle compliance and investor verification at scale? I think that's a big difference. And also who's in the room. I think that initially 18 months ago was really about innovation groups, curious portfolio managers. Now we're sitting with CFOs, general counsels, compliance officers that really want to understand how sort of tokenization and how these new assets really fit into their existing model in terms of risk, compliance, trading, and operational. So I think that with all of this sort of changing, I think we're seeing from a sales perspective, the sales cycle is starting to compress immediately because the internal skeptic isn't as loud anymore. They understand the value, they see the value, and now they want to ask, how do I participate and how do I get involved? So that's exciting to see.
Yes, indeed. As our survey shows, a lot of our investors, verified accredited investors, are curious and eager to learn about digital asset. But there's a difference between, from wanting to invest, from learning about it. So Frank, what is the gap between curiosity and actual capital deployment? What are the blockers that you see exist?
Yeah, I would echo the things that Mike just referenced from a category perspective, right? Operations, risk and compliance, also investment choice, right? So I think some of the initial blockers were uncertainties or from clients. Can they transact in this space in a regulatory compliant way? Or are there operational issues? Or can the blockchain sync with their existing systems? However, we're seeing each of these fall away. The technology is improving, familiarity in the market is improving, and there are a lot more service providers that just make things easy. Similarly, on the investment choice side of things, you're seeing a lot more assets tokenized and giving investors different options in terms of if they want to deploy capital into fixed income, equity or other asset classes, there's really something for everyone at this stage.
I see. Mike, what do you think? Are you seeing institutional investors move beyond curiosity into actual deal flow? And what are some of the actual concerns that keeps investors from moving forward?
Yeah, and I think you can look at sort of it's not uniform across the entire institutional spectrum. I think we're seeing sort of two dynamics. We're seeing the large sophisticated institutions like the larger family offices, the more progressive RAs and wealth managers, they're moving into actual deal flow. The second tier, which is sort of the mid-market institution, the small pension funds, community bank, trust departments, sort of kind of is the sort of the I would say the second layer of sort of the institutional investors that are trying to broaden their investments and how they participate in this market. That's also accelerating. But I do think that overall, I think that this is something where we're really starting to see the real progressive firms that have now want to broaden the product offerings. And you look at RIAs and wealth managers, due to new regulatory changes, they have the ability to allocate funds into different type of investment portfolios. So I think that what we're seeing is the opportunity to expand the offerings and participating in this space has significantly grown. And this is great because I think that obviously it brings more liquidity, more validity to the market. And I see where there's a real opportunity to not just address the large institutions that obviously come with a tremendous amount of capital, but really educating, helping the second tier get to that level where they can participate at a greater level. So I do think that that's accelerated. I think we're going to still need a little more time to get to a level where we're going to see mass adoption. But the last 18 months, we've seen significant strides for sure.
Thank you for that. Let's move on because it's, operational and also there's a regulatory legal landscape that involved and very important to set the foundation of everything else. So Fred, from a KQ perspective, what is the regulatory clarity on digital asset right now? What's still murky?
Well, you definitely use the right term, which is clarity. And right now, having just passed the Senate a couple of weeks ago, is the Clarity Act, which really puts a regulatory framework around a lot of the questions that have been in the market and plaguing market participants for some time. So I view that as very positive, and hopefully that does move towards passage of legislation. Similarly, on the positive side of things, we had the Genius Act passed last summer, which sets forth stablecoin legislation. And in addition, from a more informal perspective, we've had the SEC and CFTC give the market a lot of guidance with respect to these products. And we've also had the banking regulators weigh in and give banks more latitude to be more active in this space and, quite frankly, do more without the fear of regulatory reprisals. This is great in the context of custody and capital, both on the bank and broker-dealer side. And then in terms of what's still murky, I think the biggest category is token classification relating to ancillary assets and things like that. But much of that should be addressed, or much of that is addressed in Clarity. So if that passes, I think a lot of those issues would go away and be very helpful for market participants.
I see. Mike, when you're talking to allocators about digital assets, what's the number one operational concern? Is it custody, liquidity, settlement, or something else?
I would say the three concerns that I hear more often than not, and it's custody, liquidity, and compliance. Those are three kind of main. I think that the main area around custody is just about integration. It's about how does it fit into my existing reporting stack? Can my fund administrator reconcile it? The question whether the solution communicates with the rest of their infrastructure. I think that's a very important part because that people want to use a legacy system with the new technology. And then the other one is obviously secondary liquidity. I think a lot of people think that tokenizing something automatically brings liquidity. And I think that, the question I get is if I put capital into a tokenized private credit deal, what does my exit look like when I want to have a liquidity event or maturity? Is there enough liquidity? And So I think this either some people think that tokenization automatically brings liquidity, and other ones are wondering, how do I get liquidity? I think that it's a legitimate concern because in traditional private market infrastructure, there really is very sort of there are different ways that you can get liquidity, but not in an efficient way. And I think that we're trying to answer here in this is that we can provide liquidity in a way that's more, I would say, open in terms of we can get a broader investor audience that can come into our ATS and provide liquidity for an asset when it actually has matured through a seize period. And I think that liquidity gives investors sort of just addresses their concerns in terms of if they're investing in a private market security, are they going to be able to exit it? But the reality is that they will be able to exit it, but it won't obviously lead to mass liquidity. It's not, so I think that there's sort of that chicken or the egg. You got to kind of get a lot more assets, basically being tokenized and brought to the secondary market to create that sort of flow and interest. I think that's a big thing. And I think also it's the compliance portion that I think is a big deal where people want to understand how investors are verified, credentialed, and tracked through a single workflow in terms of getting the right investors that can actually are eligible to hold the assets. And so I think those are the three things I see that consistently come up in conversations. And I think we have answers for all those, but I think those answers will be clearer and more evident once the market matures just a little bit more.
Very good perspective. You mentioned compliance, and I have a due diligence question for Frank. So from a due diligence perspective, what documents or legal frameworks should investors need to feel confident about before they make an investment in digital asset?
Yeah, I mean, I think in the context of digital assets, investors should understand what they're purchasing. So, we've seen a number of approaches taken to the tokenization of publicly listed securities, such as NVIDIA shares and Apple shares, and each of them is a little bit different and nuanced. So investors should certainly dig in and understand what they are purchasing. They're not going to be direct holders in those securities, and what are they going to be vis-a-vis the issuer of those tokens. With respect to tokenization of other RWAs, as Mike mentioned, tokenization of private credit or something like that, I think investors need to do the diligence that they would do in connection with a private credit investment via traditional channels, right? Something that wasn't tokenized, right? What is the credit? Who are the borrowers? What are the terms? And does this make sense from an economic perspective? Tokenization does not turn a bad investment into a good investment, right? So the investor should be comfortable with the underlying risks. In addition, they should be comfortable with what tokenization is layering on, right? Are there transfer restrictions? What are the specific aspects of tokenization that are going to be layered upon the investment? Are there restricted periods? So on and so forth. But asking questions is important. But I don't think there's anything insurmountable that investors cannot understand if they're asking the right questions.
Got you. And you mentioned verticals. And our survey shows that a lot of our accredited investors are interested in learning about digital asset, particularly in the alternative investment, private credit, real assets, etc. Why do you think that vertical resonates the most?
I think there's one of the things here. I think that when I think of tokenization, I look at the benefit of tokenization. I look at the accessibility. We talk about sort of democratizing access to assets that obviously the traditional investor may not have access to in the past. And I think that offering private credit and certain RWAs that get tokenized, these are things that are piqued the interest of a lot of different investors that may not traditionally have access to that. If I look at the main categories where people really seem to resonate with and have real interest in it, tokenized treasuries and money market funds it's a safe investment that produces yield, but also can be utilized for collateral and various DeFi protocols and whatnot to enable compounding of yield, which I think obviously is going to be something that continues to grow. I think there are a lot of different flavors of those that are being offered. The private credit and the asset-backed credit, I think it's an incredibly interesting segment of this that's growing rapidly. in both short duration and longer duration assets. I think also that to me, it's fueling a lot of different growth in different industries in terms of there's easier ways for firms to get credit and get access to capital. And I also think commodities and real estate are the two sort of the third bucket put together, where particularly gold and I think oil based or any sort of type of natural gas based commodities where there's a huge amount of interest. And I think that is used for on-chain collateral, but also people see the real interest in it, especially real estate in terms of in valuable geographical areas. I think people want to participate. People want to, they may not have had that access to that before. So I think there's a real interest in that. I see that at T0. I say that probably over 70% of the issuers that come to us have some sort of real estate component to it. It could be both equity or a debt instrument, but those are the three sort of sector or segments that I think are the real main growth categories for tokenized assets.
Frank, for counsel advising clients on digital asset strategies, what's your standard recommendation right now?
Well, when we see clients come in on the issuer side, we really dig into the cash flows, right? In terms of the project, where tokenization adds a lot of value is when there are regular cash flows or when there may be actions that the smart contract can help take and automate from both a compliance and economic perspective. So we make sure that client understands how all of these things will fit in with the issuance. And similarly on the investor side, it goes back to the diligence points that I mentioned earlier. Understanding is key, and none of this stuff is magic or is not insurmountable from a comprehension standpoint. So just work through things, understand the flows, and make sure people appreciate what the product is offering.
Thank you for that. You mentioned understanding is the key, but for someone, especially for our audience who is watching this, what would be the first step that you both recommend for them to start?
I would say that the first question really, I would think, is when you think about actively being involved in tokenization, I think that you have to separate the asset class from the infrastructure. I think that really it's about what is the underlying exposure that you're looking to get. And I think that then you can kind of, because if you start with the outcome that you want and then work backwards to the instrument, that's really how you can avoid the pitfalls of some of the early generation of digital asset investors. Some people just looked at the technology as something interesting. I think the technology enhances the utility and the value of the underlying asset, how it can be utilized for collateral in terms of DeFi protocols, the accessibility, the trading of 24/7, 365. I think that to me, so somebody's looking to really, kind of just enter this space is, I would say first determine what the exposure you're looking for, then try to find the right infrastructure that provides that in a safe, compliant manner. I think that you need to have the full gamut. I think that you don't want to own an asset with no direct exit strategy in terms of having accessibility to secondary trading, having true liquidity. Those things are critically important because otherwise you're not going to be able to exit at the right time. So I think that's sort of the right approach. And I think as the market has evolved and matured, more compliant platforms are offering the assets. So I think there's a sort of a wider optionality for investors. So I would say just start looking at the underlying exposure and then find the right infrastructure that provides the entry point and the exit point in a compliant way.
Perfect. That's very good advice. Frank?
I would encourage people to dip their toe into this market, right? Open an account on T0 or a similar platform. Look at the investments available, see if there's something that makes sense for a person's particular portfolio. And then, as I said, dip your toe, right? This is not something that people are going to allocate 100% of their investable net worth into, but it's certainly a means through which they can get diversification in terms of, as Mike mentioned, liquidity, transparency, and efficiency that blockchain-based securities offer.
Thank you for that. In the next 12 months, what would you expect it to have changed in the space? And, for our investors, what should they be preparing for?
I think the product shelf will expand dramatically. I think that we're starting to see more and more complex products being tokenized. I come from the structured credit space. I'm a little bit biased, but I'm really excited to see, just structured credit products, some syndicated loans, more infrastructure debt, insurance-linked securities. I think those are things that are complex and fit the institutional investor, but they also fit some of the more, I would say, advanced individual and professional traders. I think that's something that will generate a lot of interest and a huge amount of capital that be allocated to it. The second, I think, is the secondary market liquidity. I think we're starting to see a market that's very fragmented be defragmented. That's something we're working very, very closely with at T0 to provide the rails to connect lots of different platforms. I think that's probably the biggest roadblock right now. Is just that many platforms have a few assets that aren't very liquid. And I think once you get the secondary liquidity, we actually get to see the true value and all the promise of efficiency that tokenization has kind of promised for years come to fruition, right? And I think that to me is the real inflection point. We'll really start to see some real growth. But I think the bottom line is that more products, more sophisticated products, and that will drive even further flow. And then by default, that will create a more liquid secondary market.
Yeah, I totally agree, Mike. You mentioned products on the credit side. I agree. Those are going to expand both in terms of breadth and complexity and payoff options. I think similarly on the equity side, you're going to see structured payoffs in perhaps structured note form or more options coming into this space, giving investors capability to get exposure to different equity payoffs. And totally agree with you, Mike, as well on liquidity. We're seeing investor numbers grow month by month. You're also seeing much larger players, announce plans for tokenization. And once those products come into the market, it will cause exponential growth in terms of investor interest.
Beautiful.
Right.
Frank, last word. Any final thoughts to leave with our audience?
I mean, I think we covered it all. I'm really anticipating a lot of growth over the next 12 months, hopefully some regulatory clarity as well. We're totally leaning into this space because we see the huge potential for it. So very bullish and very optimistic.
If I were to give advice to somebody right now, it's just really about looking at your own sort of technology and how your operational infrastructure can connect into this, sort of like call it the digital world of tokenization. And what I feel like it's not about replacing a legacy system. It's about having the additive feature of, tokenized digital assets, and really broadening the spectrum of the products that you offer. I think that just kind of looking forward, I do think that if you close up and try to stay in sort of the traditional space, you're going to go the way of the dinosaur. And I think that's the reality. I think you have to be forward thinking and get on this train. I feel like I've been in this space now 8 years, and I've seen it's going faster and faster. The flywheel is going faster and faster. And I do think that, the window where you can move thoughtfully through this and really connect is still open. But I do think that open window will shut as people kind of separate themselves. So the ones that really are the forward-thinking firms that take advantage of this and really accept it and move forward with it, they're the ones that are going to be in business down the line, and they're the ones that are going to separate themselves from the competitors.
Totally agree. Well, thank you guys so much. And this is a very informative session. I really appreciate you guys coming here. If our investors have more follow-up questions, we'll be reaching out to you.
Great. Thank you, Jenny.
Thank
Really
you, Jenny.
appreciate it.
Thank you so much.
Thanks for tuning into Accredited Investor Clips, powered by VerifyInvestor.com, a T0 company.